India just pulled off an economic twist. The government cut GST rate, but the collection still rose to a high of 1.95 lakh crores. How is that even possible? Let us break down the mystery and uncover how India's sales boom is rewriting the rules of economics. So, in this particular million dollar series, episode number 2, we are going to discuss how did India's GST rise even after the rate cuts, right? To answer the question, Samvid Money Minds is a channel wherein Samvid Narayan, trying to break down the economic news across various newspapers in a simple and understandable manner, even to a layman who knows English, right? So, if you want to be a part of the revolution, and if you want to understand the economy around the world, please go ahead and click the subscribe button right now. Right. So, hello everybody. This is Samvid Narayan, and welcome to Samvid Money Minds. So, as you can see on the screen, we are going to be answering the question: how did India's GST rise even after the rate cuts? Right. But let me tell you what you're exactly wondering, or what your question actually should be after seeing the title. Somewhere, weren't you the one who told us that there's going to be a reduction in inflation by 1.1%, and therefore the government is going to gain hugely in tax? Yes, I was the one who told it. I'm not neglecting it. But see the statement that I exactly put on the PowerPoint presentation in the last video as well as this video. The link is in the description, so you can go ahead and see that. I told you that, however, read this particular statement properly here. Read this particular statement properly here. However, there is going to be a 48,000 crore rupees loss, which is raising fiscal concerns overall, and the changes seek to make essential affordable and drive economic growth, right? Even though it seeks, so the exact sentence meaning is, even though it seeks to increase the consumer demand, there is going to be a temporary loss of 48 crore rupees, right? So I was the one who told you that there's going to be an increase in demand, but I was also the one who told you that 48,000 crore rupees, there's going to be a loss. But there's no loss over at all in October 2025 collection. That is what this particular data shows you. See here. This particular data, which says that there is going to be there is actually a 4.6% increase over the last year collection of 1.86 lakh crore. After refunds, it reached to 1.69 lakh crore, which is up to 8.3 that more than the last year, right? And see this particular graph which I have presented here. If you see this particular graph which I have presented here, the April 2025 was the highest, and the second highest is October 2025, right? So, as per the fact that I told you in the last video, there should actually have been a dip here, right? But there's no dip. There's actually a rise than September 2025 estimates. Okay. If you see here, September 2025, the estimates is 1,89,000 because the actual data has not been released by the department. And October 2025, the collection is 1.95 lakh crores, which is confirmed by the Economic Times November 2025, right? So, which is completely contradicting with the fact that I told you in the last video, right? So, this particular episode, actually, let us start delving into why this wasn't the fact that they expected, that is the dip. Rather, it was a rise or surge in collection, right? So the first fact, the first reason that we have to understand is the role of festive sales. The festival season, that is the Navaratri season, or the Vinayak, I'm sorry, not Vinayak Chaturthi season, Navaratri season or the pre-Diwali period or the Diwali period completely led to a surge in or hiking in sales of automobile sector, FMCG sector, that is consumer durables, clothing sector, and electronic sector. So there was actually a sharp rise in purchase volume compensated for lower taxes, whose compensation actually led to a higher overall GST inflows, right? And the second reason that we are supposed to that the experts are attributing, which is supposed to understand, is the rising in domestic demand, right? So the India's middle class income, coupled with the greater access to credit and expanding service sector, strengthen the domestic consumption. So sectors such as tourism sector, logistics sector, retail sector saw a higher purchase or higher consumption, which expanded the tax base and kept the revenue on a upward trend. Okay. Now moving on to the third. This thing, which is improved tax compliance. So the government had started or saw a significant push for digital compliance, has yielded for this significant returns. So the integration of e-invoicing, AI-driven return matching, and stricter monitoring has reduced the fake invoicing and tax evasion. Right? Say, for example, uh, actually, let me explain this point of e-invoicing, AI-driven return matching. Say, for example, the government is collecting your all of your data through the process called tax deducted at source, right? So they will be deducting a particular tax at source, which is there for both in direct tax, so that is income tax as well as GST, right? So they will deduct a particular percentage of tax from the bill that you are actually paying. So through that, they will actually do the reverse calculation, and they will be knowing the amount of purchases that you have made in respect of GST, right? So they will have the exact data. And in the GSTR 2B or GSTR 3B, which is the returns, you will be filing one data. What the artificial intelligence, the computer will do is, you have filed one data, and the government is having one of your data. These two will be reconciled. These two will be matched, and since it's a computer and not a human, you cannot cheat it. So therefore, it will be reducing the risk of fake invoicing and tax evasion. So these particular measures have increased transparency and ensure that more transactions are entered into the formal tax net. So over time, more small and medium enterprises have joined the GST system. This formalization of business operations has widened the taxpayer base, increased awareness, and simplified filing returns, have further encouraged voluntary compliance, resulting in a steady revenue growth. So two things have encouraged the small suppliers. One, the cutting of tax rates. Two, the digitization, because say, for example, even in a soup shop or a peanut shop, in Tamil, they say it as Verkadala Kada, right? From there to the established supermarkets and highly qualified, highly posh shops, everywhere there is now GPay, right? So if there is a GPay system or a artificial intelligence system, it is maintaining all the transactions. So from those transactions, they upload it in the portal and they file it through their auditor or through their normal accountant. So therefore, AI or artificial intelligence have simplified the process. And more importantly, they are also encouraged to pay the taxes because of the tax rate cuts. Therefore, through the artificial intelligence and rate cuts, the tax or the people who on whom we can assess the GST have increased, and therefore the tax base have increased and collections have increased. Right? Hope you can understand it. Now, moving on to the next point. Growth in manufacturing and exports. India's manufacturing sector and export sector has contributed very, very significantly to the collections. Increased factory output, simply because the rates have been cut on many things. Therefore, the price of raw material will decrease. If the price of raw material is decreasing, then the overall production cost will decrease. If the overall production cost is decreasing, then automatically the manufacturing cost will decrease. So therefore, if the manufacturing cost is becoming cheap, then the manufacturer will automatically produce more quantities than he was already producing. And therefore, we can export more, correct? If we can export more, automatically there is a growth in manufacturing and exports. And simply this point is justified, right? So increased factory output and more robust export performance and stable supply chains have generated higher tax flows at the input and production stages, right? So this shows how the industrial growth directly supports the public revenue, as I already told you. Okay. Now, what is the exact impact on inflation? Okay, the inflation is all the moderate inflation also played a subtle yet positive role. Even though the tax rate have reduced, the nominal value of goods have increased. That is, the price of goods have increased due to the price level. This price effect ensures that per unit tax collection remains increased, helping to stabilize the overall revenue, right? Before moving on to concluding this entire video, I want to share a small tidbit of this was actually at the Business Standard Summit, BFSI Summit of 2025, wherein Chief Economic Advisor Dr. V. Anantha Nageshwaran expressed his optimism for about the economy. That he is noting that the economy is performing better than expected. This was this reflected on the revised growth forecast of from 6% to 6.7 or 6.8%. Consolidating or summing up the entire video, we first had a quick recapitulation of the various rate changes that we saw in the last episode, and we saw that the predicted revenue loss of 48,000 crore did not occur. Rather, an unpredicted gain of GST collection occurred, and we also saw various reasons that were attributed to it. And one more thing, we also saw optimistic opinion of the Chief Economic Advisor, Dr. V. Anantha Nageshwaran, right? So wherein he expressed his optimism through the economic growth pattern from 6% to 6.7%, right? So I hope you gained some insights in this particular video. You do remember to check my blog on these two topics. The link is in the description below. And if you want a PDF of this entire discussion, that is also there in the description below. You can go ahead and click that, right? So hope you had a useful time with me. I had a lot of fun researching about this topic. So meet you in yet another episode of $1 Million Question Series. Until then, this is Samvid signing off from here. Goodbye, take care, and cheers. Thank you.